It's just after 6 Eastern time. Thanks for joining us tonight. We're going to spend a few minutes together talking about building wealth with mortgage, note, and fund investing. My name is Josh Shine with Trius Lending Partners. Let's kick it off and get into building wealth with note and fund investing. Okay, so today we're going to spend a few minutes talking about sort of the goals for today, I guess. We like to do sort of a quick summary of what we're going to do. We're going to talk a little bit about who we are, who Trius is, how we conduct ourselves, how we got into business, what we've done, why Trius, why are we unique, what sets us apart from sort of our competitors in the industry, from other people who do similar things. Why do we think, and we know we do things a little better, a little smoother, and a little better experienced than our competitors, than our peers in the marketplace. And then, of course, we're going to talk about the investment opportunity. So most importantly, if you're on this, you're looking to learn about mortgage, note, and fund investing. That's two different methods of investing with us. We're going to talk about our track record, make sure we explain the ins and outs of the investment opportunity. And then, of course, we're going to get into the Q&As. So let's kick it right off. Again, I'm Josh Shine. That's Jessica Franta. Jessica is our investor relations manager. Jessica oversees all of our investor relationships. Her team works with anyone who has funds invested with us through notes or through the fund. We'll talk about, again, those two methods of investing. Her and her team are dealing with questions, answers, issues, problems, and most importantly, making sure everyone gets paid on a monthly basis and that their investments are safe and always taken care of. My name is Josh Shine. I'm the CEO of Trius Lending Partners. Okay, so who are we? What do we do? What's the deal here? So Trius Lending Partners is a private money real estate lender. What does that mean? That means we exist to provide funds to real estate investors in the greater Mid-Atlantic region. So that means we don't do traditional home loans. So we don't do regular refinances or purchases of your owner-occupied home. Okay, that's obviously somewhere you're going to live in. That falls under different guidelines, rules, regulations, and licensing requirements. I've been in the mortgage industry for 25 years. A lot of my career was in that side of the business, which is the licensed mortgage transactions for traditional homeowners, okay? This is the exact opposite and really everything but that. So an investment rental property, a single family rental property, a multifamily rental property, a 3-unit, a 2-unit, a mixed use, a small commercial property, a strip center, a large commercial property, whatever it might be, but anything that you're not going to live in is what we lend money to. We give the money for purchasing the property and rehabbing the property if you're going to hold it as a rental, or if you may be doing a flip, buy it, renovate it, and then sell it for money. That's what a flip is. We work within the greater Mid-Atlantic region. That means generally a few hour radius from our office in Towson. We're right off of Kenilworth Drive at Kenilworth and Charles in Towson. So we generally work within a few hour radius. Having said that, as we've continued to grow, we've expanded that radius a bit. So we'll head up to Philly, we'll head over to Delaware, to the beaches, we'll do York, Harrisburg. From time to time, we'll do Western Pennsylvania, Pittsburgh, not a lot, but a little bit, all of the state of Maryland, DC, a large chunk of Virginia. I might even say these days we're doing all of Virginia. And then sometimes from time to time, we'll head down south into the Carolinas, Tennessee, Georgia, Florida. Again, that's case by case. Our primary business is in the greater Mid-Atlantic region. And so the investment opportunities that we're going to talk about is what we use to fund the loans that we give out to people. So we collect funds from private investors, take that money and lend it out to real estate investors in the community for them to buy that property, rehab that property, again, for a fix and flip or for a fix and hold. Right now, as we've grown the business, we have over $100 million in assets under management. That money is 99.999% private, friends, and family. We do not have any bank institutional partners, no Wall Street guy behind us, or big, large company, or large headquarters, or master global headquarters, or anything like that. We're locally based and with local partners and local investors, and that's really important to us. All right, next slide. Okay, there's Steve. There's the beard. We couldn't go more than a few slides without showing it. Everyone out there, in our experience, when we talk to investors out there, everyone's looking for, like, I want to get into real estate, right? Maybe someone is sick of the stock market. Maybe someone feels that The stock market has uncertainty. The stock market has a lot of fluctuation. Okay, high highs and low lows. It gets a little crazy out there. We've had people who have ridden Nvidia up, but then the one day it went down 5%, they lost their mind. We've had people who've ridden Tesla up, ridden Tesla down, ridden Tesla up, and then tried to figure out, are we going to ride Tesla down again? So there's a lot of uncertainty in the stocks, and depending on which one you're in. I was talking with a friend recently who was in Disney, and I didn't realize this. I don't know if it's changed. It's about a week or two ago. He said Disney stock has been like way down. So, you never know what you're gonna get. And so a lot of people contact us, and a lot of our investors we talk to say, I want to get into real estate. I'd love to invest in something that's more steady return, but I don't know that I'm ready to buy properties myself. I don't know that I'm prepared to own properties, flip properties, be a landlord, deal with all the nonsense of that. So we say is this is an opportunity to invest in real estate. This is an opportunity to put some of your money, your savings, your assets, your retirement assets, whatever it may be, into the real estate sector, which is safe and predictable and has a phenomenal track record over the long term. And this is a great way to diversify your assets by getting into this category of investing without the headache of having to deal with a property, be a landlord, have someone calling you at 3 in the morning with a toilet that's backing up. Okay. At the end of the day, this is a safe, secure, and sound investment with phenomenal returns and phenomenal track record. And we're going to talk about that in a minute as well. Okay, our story. So that's Steve Bond. Steve Bond is our founding chairman of the company. Steve Bond started the company in 2003. It was a second career for him. And he just had people reaching out to him saying, hey, I just need some money to rehab my property. Can you help me? And on a personal level, he had retired and was actually investing in the stock market. And he decided, I don't want to be in the stock market anymore. He had just gotten burned during the dot-com era. Some of you may be familiar with that, when you could buy Pets.com stock and go up 500%. And then the next day it went down 99%. So he got burned on that and said, I'm not doing that anymore. I want to control my funds and understand what I'm doing. I'm going to lend money to real estate investors. He was doing some mortgages and having people contact him. It was a small company. He was doing very well, very successful, raising money. Once he ran out of his own money, he raised some money from friends and family and was still a small business and doing well, consistently funding real estate investors. Steve and I had known each other for a long, long time. We reconnected after a few years of being apart. We had worked together in the mortgage industry at one time. And I said, look, I'm looking to get out of the big mortgage corporate world. Let's get together and maybe turn this company into something a little bit bigger, a little bit better. So that's what we did in 2017. Fast forward, we started raising more money. We started doing more business. We started growing the company pretty significantly. You might have seen on one of the earlier slides there, we made it on the Inc. 500 list. We've been on the list 3 times in a row, 3 years in a row. We've grown significantly over time as we got the organization a little more professional, a little more sophisticated. Then in 2022, Steve Sless joined. He became our COO. Again, as we continue to build out the company, we needed to be a little more structured, a little more organized in what we did. And then COVID came, tremendous volume of business in COVID. Not a good time for any of us on a personal level, but business-wise, it actually was a good time for real estate investing and a good time for our company to grow. And so we've continued along that trajectory for the 2 years since then. And really, at the end of the day, as we continue to build out the company, we spend a lot of time, effort, and energy talking about and building and making sure we are always following our core values. So important for us to be representative of what we care about with our company, with our employees, with our customers, and most importantly, with our investors. And that's where those core values come in. Great communication, a growth mindset, relationship-based. That's what things are all about in life, and willing to get the job done for our investors, for our employees, for our customers, for everyone we work with every day in everything we do in our business. As you can see here, as things grew, okay, the numbers started to really pop up, right? So this is where we are now, above 100 million in loans that are out on any given day. I think we're currently 103, 104 million, Jessica, is that right? Yeah, she's nodding along there. So we've grown significantly over time. A nice, I would say somewhat steady increase, right? Really nice, no crazy pops, but a nice jump up as we've grown the business. And we've hired the right people. We service all of our loans in-house. Our investor relations team is in-house. Everyone works with Trius, at Trius, for Trius. We don't outsource really anything at all at our company. And that's really something that's important to us as well. But we continue to grow in this direction. Slow and steady wins the race, but steady is consistent as well. So again, as I've mentioned in some of the slides we've talked about here, in-house. In-house is really important to us. We manage everything in our process, okay? So we want to make sure we're talking to all of our borrowers. We want to make sure we're talking to all of our investors. We want to make sure we're underwriting in-house, physically here in Towson, all of our loans. We're looking at people's income, credit, etc. We are not an equity-based lender. And what does that mean? There are some lenders out there that do similar things to what we do that simply look at the property. The term for private lending used to be hard money lending. The term hard money lending came from a hard asset. You're just lending on the hard asset being the property. So I'm lending on the property itself. That's the asset. And as long as the property is good, I'll give X amount of loan to value, X% of loan to value. So if it's worth 100,000, I'll give you 60% of the loan to value. So $60,000 against that $100,000 value. I don't care what you look like. I don't care about anything else, meaning look like on paper. We do care about what someone looks like on paper. So the borrowers we work with, we check their credit, we check their income, we check their assets, we check their tax returns, we check their pay stubs. We make sure they're good borrowers. And that results in consistency with the quality of our loans, consistency with the returns to our investors, and a great track record, which we'll get into down the road as well. And expertise is key too. Since 2003, we've been lending money in the greater Mid-Atlantic area. That's a tremendous amount of expertise and knowledge of the regions, of the streets, of the neighborhoods, in the city, in the surrounding counties, throughout the state. What's good, what's not good, understanding properties, understanding ground rent, understanding borrowers, understanding how properties work, how renovations work, etc. Then, of course, we service all of our loans in-house. That means we're the people collecting the payments on a monthly basis. We have a dedicated team of people. They do a great job. They're on the phones all the time. For the people that don't pay, they're on the phones. For the rest of them, they're just collecting the payments on a regular basis, but they're on the phones, tracking down people who aren't making payments and making sure we're getting paid. Our default rate is like 1.2%, very, very low. And that's really a testament to great underwriting, great relationships with our borrowers, and really tremendous servicing of our loans. That's important as well. And then, of course, the risk management, right? Always paying attention to the quality of our loans, always paying attention to the neighborhoods we're investing in, the quality of the property, the ability to get the value that someone thinks it's worth, being conservative in our valuation model, okay? And so as a result of that, most of our original investors who gave us money investing with us, some as early as 2003, still have their funds invested with us. That is a fact. They have not taken money out because they've been getting a phenomenally consistent return with no losses for 21 years. And the other major testament to our success and our track record and the kinds of relationships we sustain with people is that 45% of our loans are issued to repeat borrowers. People come back to us again and again because we're easy to work with, customer service and relationship based, do right by everyone. We're not in it for the quick buck. We're in it for the proper relationships. That's how we protect ourselves. That's how we protect our investors. That's how we in turn protect our borrowers as well. Okay, next slide. Okay, so here's the basics of where we are. Jess, I think this is where you take over.
Yep.
All yours.
Awesome. Thank you. Thanks everybody for being here tonight. Your time's important, so we're super grateful to have you here. Just real quickly before we kind of get into the nuts and bolts of actually what it looks like to invest with Trius, the process. Kind of Josh had mentioned, that about 45% of our borrowers are repeat borrowers. I was actually one of them. So I come to Trius after working with Trius for about 4 years. My husband and I had done 10 deals with Trius. We built up our own rental portfolio of 21 units at our highest number. And so I can firsthand speak to the fact that Trius really, when they say our core values are great communication, our core values are, taking care of our investors and taking care of our borrowers. What does that really mean? Well, it does mean repeat borrowers. I was one of them. And of course, it means somebody that actually felt so highly personally of the company that I applied for a job. So here we are. Um, but yeah, so what does that look like to invest with us? So of the 100 million plus assets under management that Josh mentioned, it's kind of funny, but it's 50-50. So the two primary investment vehicles we have are direct note investing and then our Trius Fund One. And it's about half and half. It's about 50 million of each, give or take. And it's just because personal finance is personal, and it's my job to work with each individual investor to determine what works best for people's like personal finance, as it were. Speaking first to note investing, that is open to both non-accredited and accredited investors. What is an accredited investor? An accredited investor has a net worth exceeding 1 million, and that excludes their primary residence and or they make an income of 300,000 a year if they're married filing jointly on their tax return, or 200,000 plus a year if they're individual. So that's what an accredited investor is. If you are doing a direct note investment, and that means, hey, I'm investor A and I would like to fund all or a portion of 123 Main Street, and you're only going to fund that specific property, that is direct note investing. I work with you, and you can be accredited or non-accredited. As I just mentioned, it's very much tailored to meet investor preferences. So we have a number of investors that have been with Trius for over a decade, and they're still doing direct note investing. We're happy to do that. You get to work with me probably a lot more as pick up new notes and they pay off, and we find you new ones. And part of that process is investor relations. It's me learning what you want, because we do have some folks that have geographic preferences, they have borrower preferences, and we really work to tailor that experience for our investor. The average note length is 6 to 12 months. And what that just means is that, for example, when I was a borrower and I was getting a loan on 420 Maryland Avenue down in Virginia, I was doing a 12-month note. On average, a 12-month note pays off in about 8 or 9 months. So even if the initial note term might say for 12 months, it's highly likely that investor relations, I would be reaching out to note investor, notifying them, hey, the borrower paid this off in full. What would you like to do? Would you like the funds paid out? Are we going to get you a new note? And then I get to work with the investor in support of that action. Another thing about direct note investing, it's open to self-directed IRAs and also 401k rollovers. So super powerful, especially as Josh was talking about aspects of diversification. We have a number of investors that are looking to diversify some of their retirement savings. Maybe they don't want everything on that Tesla stock, as it were. And so we have a number of companies that we work with. I could provide information about them later, and we set up and help kind of facilitate those two options. Moving to the right-hand side, so Trius Fund One. So this is a pool of loans, effectively, is what it is. And it is open to accredited investors. So that net worth of $1 million or more exceeding your personal residence and or annual income. And it has some differences with note investing. The fund allows you to reinvest your dividend income. So each month, if you have a direct note, 123 Main Street, and let's say you average a 10% annual interest return on that interest is paid out to you each month. And in addition, at the end of the year, you're issued a 1099 for dividend income. The fund, you have the option to have that payout, or we can actually reinvest, which is super powerful. A significant portion of our investors go ahead and do that. And that, of course, juices your IRR and your compounded returns. So you really can compound what you've got going on. It does have a 1-year commitment, so we're looking at 12 months. And you can extend or return funds as needed thereafter. Again, I work with the individuals if they've got something coming up, and typically it's not a surprise. We've had a couple instances where an investor, after being invested with us for a number of years, needed funds. Something happened personally. We work to support them, but typically we work in advance and folks notify us, and I'm able to support the requests. This, like note investing, is open to self-directed IRAs and also 401k rollover. Same companies we work with, same process, very straightforward. And one difference is that instead of a 1099 at the end of a year, you're actually issued a K1. For tax purposes, we tend to issue those at the beginning of the next year before taxes. And the K1, because of how the fund is structured, it does have a sub-REIT and QBI structure, which actually allows for tax benefits. And that actually juices your return by about 2% as we're able to run expenses through the fund. I just said a lot, so please, if there's questions, please bring them in, because especially on that last stuff, and I will also say this, and then we'll get to the next slide. You know, especially with some of the fund in particular, it can be a little details, a little more nuanced, and I'm happy to take questions or a meeting after this whole thing is done. Right. One other investment opportunity we have, which is really, really exciting. I get very excited about it because I am a rental investor myself. Long before I worked at Trius, and then obviously for the 3 or 4 years I was working with Trius before coming over to this side. So we do have a real estate rental fund. So obviously this is in the news. We all know the big players that are doing it, you know, all the Blackstone, BlackRock, all of them are in it. But so it's very simple. It's investment into long-term rental housing. We stay focused on the key aspects of what we do, and essentially single families and small multifamilies. So we're not looking to diverge away from the basics of who Trius, like who we are and what we do. So really in a lot of regards, it's much of the same. You know, as this kind of slide outlines, I mean, already as part of our core business in funding fix and flips and rehabs and all that, we're reviewing thousands of residential properties a year. We are working with hundreds of borrowers. And so we just have fantastic relationships throughout the Mid-Atlantic region, which naturally kind of lend themselves to this aspect of our business, which is having a rental fund. And what that has to offer a potential investor are, you know, cash dividends similar to direct note and fund investing, but then also aspects of taxes, you know, depreciation, and then of course being able to also recognize appreciation over a 5 to 7 year term, which I think, and again, I get really excited about this one, so I'll kind of cut myself off on this slide, but I think the market outlook for single family housing, especially through the Mid-Atlantic region over the next 5 to 7 years, is absolutely fantastic. And so that coupled with a strong, you know, cash return is going to be an outstanding opportunity. And we're actively fundraising in support of our rental fund. Next slide, please. The investment process. So yeah, as I said, it's one of my favorite sayings, personal finance is personal, and my job is to support the investor. So the very first thing we do is I set up a meeting with an interested investor. Again, answer any and every question. We take pride in that. We take pride in making sure that everybody sleeps really well at night, that everybody feels absolutely comfortable in what we do and who we are and what we have to offer. If there's questions, we owe you an answer. It's that simple. So it all starts with the conversation. And I also want to add, the conversation never ends. So once you're invested with us, you always can call me, us directly, Josh directly, and that doesn't stop, right? So it is an active conversation, and it is one that will endure throughout your investment with Trius Lending Partners. From there, we really determine what works best for you personally, note or fund. I had gone through real quickly the differences between the two. Obviously, there's even more, and I think we're getting some good questions about that. But we determine which is better. And then based on that, there's documentation for the fund. There's a subscription agreement, private placement memorandum, walk you through all of that. For notes, we have a mortgage loan servicing agreement and a launch and some documents that really codify our roles and responsibilities to you as the investor in servicing that, and then also what we have to offer, your interest rate, and what your returns will be, making sure that all of that is really well documented. And then finally, the best part, we pay a monthly interest. So I think that's why you're all here. But that's essentially, everybody's like, yes, Jessica. But that's the life cycle process essentially for investing with us. So yeah, in short, and I know we went over a lot, we probably went over it fast, but you know, really the bottom line is we are a relationship-based company that, you know, does commercial lending, but really focus Mid-Atlantic single family, small multifamily, commercial. We are focused, we are experienced, and we have a strong corporate culture that really supports that. And above all, absolutely relationship based. We take so much pride in that. And I can speak to it personally, having been on both sides of the coin, is that we're borrower, investor, and employee. It is deeply personal in that regard. So up to 10% returns, decades of a track record, and really above all, open. Would love to hear from anybody listening in tonight. And it is that personal. You contact me directly. There's no pass through. There's no secondary point of contact. If you're listening in, you call me, and I'm really excited. Would be grateful to talk to you. So I think, unless Josh has something to add, kind of having listened in, I know we do have a couple of questions.
Yeah, we have some questions. Before we jump into those, I just want to just do just a little bit of a big picture summary for a second, and then we'll get into some of those questions. There's some great questions there. Bottom line, we exist to provide funds to real estate investors in the local marketplace. We use private funds from investors to fund those loans, always first lien, super safe. And I want to focus on the track record. It mentions their 21-year track record. In 21 years, no one has lost any money investing with Trius Lending Partners. No one has ever not received all of their interest. Their principal has never been impacted, and they've never missed interest on the money they invested with us. So we have people that have received 8, 9, 10+% consistently for 21 years. Look at the stock market. Look at what else you're doing. It's a phenomenal opportunity and a phenomenal track record, because real estate has that kind of track record, and because of the diligence that we do and being very careful, very conservative, and very safe with our process on a day-to-day basis. That's a really important aspect of what we do. And the real estate fund is our new sort of growth model, which is going to be a tremendous opportunity to be even more involved in owning real estate, getting the benefits of appreciation of real estate, better returns overall, but it's a longer time horizon. So we'll be doing some separate meetings and webinars on that as well. So let's jump into some questions. Jessica, what are the risks and notes for the fund? What are the risks for notes and funds?
Well, I mean, nothing in life is guaranteed, I guess, is the short answer. But the risks and for notes and funds, it's really honestly, that's, I feel like it's a trick question, but I mean, I kind of want to say like none, but I mean, everything is in a first lien position. I mean, the risk is ultimately that you have a non-performing note, right? A non-performing loan, a non-performing, non-paying borrower. That is the risk. The thing about that is it's very heavily offset by a number of factors, and Josh really talked about them. The first is the beginning, the conservative underwriting. So everything we do, we underwrite in-house, as he mentioned. Right now, across our portfolio, we have about 360 active loans, individual loans, aka notes. We use loan and note kind of interchangeably, so I do want to say that. Across the 360, right now, there's about 8 or 9 that are not paying. So, is there a risk? Absolutely. The thing about that from an administrative standpoint is that Trius Lending Partners takes the responsibility for dealing with the non-paying borrower. And that is all codified in some of the documentation I had mentioned, but really we end up servicing that. And for an investor in the 21 plus years, they have been made whole.
So,
I mean, Josh, kind of what do you
yeah,
want to
yeah.
add to
So what Jessica said is exactly right. The bottom line is that's never been passed along to anyone. So I say
Yeah,
to people, as you grow and as you have experience and as you take on deals, A, you make mistakes. B, you have some bad luck. That just happens, right? That's
yeah,
part of the process. We've never passed any of that along to any investor ever. So even the loans Jessica's talking about that aren't paying right now, we're not passing along a loss to our investor of either principal or interest. Period. End of story. Okay. So what happens is if someone doesn't pay, we take care of the legal, we take care of the foreclosure process, we take care of taking over the property, and we pay the investor, you, out in full with interest and your principal back. And then we find a new loan for you. So we have reserves. We're very safe, very conservative. We have reserves that we set aside, millions and millions of dollars that are set aside to be able to absorb and handle the issues that may arise from time to time with loans. It's just going to happen. It's a reality. But we don't pass that along. So when I say what are the risks, or to answer that question, Noel, what the risks are, those are the risks, but they wouldn't be passed along to you. So it's not really a risk. The other risk would be a major failure in the market. That would be COVID. COVID was phenomenal for us. So now we go back and say, all right, what if a 2007 happened again, which is sort of a mortgage real estate meltdown? We shock test our portfolio on a regular basis, looking at valuations and saying, okay, if the market dropped 10% tomorrow, what would that do to our portfolio of loans? 15%, 20%, 25%. I can tell you this, if it dropped 50%, we all have a lot of problems. Okay. That would be cataclysmic, catastrophic, nuclear, in the real estate term, with regards to the effect it would have on the entire economy in very bad ways. Has not happened, would not happen, will not happen. We're in the mid-Atlantic where the range of highs and lows is a much narrower band than it is in, say, LA or San Francisco or Miami, where you might go up 5 times, 5x return. You buy a place for $1 million, it's worth $5 million 2 years later, and then it drops off and drops off 60%. We don't have that happen in the greater mid-Atlantic. It might go up 5, 6, 7, 8, 9, 10, even in the good days, 15, 20, 25%. It never went up 50, 70, and 100%. Okay. And never dropped off 30, 50, 70, 100%. Okay. That just doesn't happen in our neck of the woods. And in the regions that we lend in, it doesn't happen. We don't do sort of high flying hot areas for just that reason. Okay. So that's the reality of how we handle those and how that works. And that's what keeps the risk down to, I would argue, zero, but those would be the risks. The other thing I say with regards to risks in the marketplace is, if the market were to get really bad, that doesn't mean the loan's bad. That doesn't mean the property's bad. That doesn't mean the borrower's bad. So if we do a loan for someone who works for Social Security, this is a common story. We work with a lot of people who work for the federal government. It's the nature of our region, right, here in the Mid-Atlantic. So a husband and wife, one works for Department of Defense and one works for Social Security, and they both make pretty nice salaries and they have pretty good credit. Just because the real estate market dropped doesn't mean they're going to stop paying automatically. They have good credit scores, so they're not going to just walk away from that property. They may not be able to flip it, so maybe they decide to hold it as a rental because they may not be able to make much money flipping it. They're going to hold it as a rental long term. That's great. The rental market is phenomenally growing at a really consistent clip right now. So we think the downside is very low and there aren't too many risks associated with it. And because we absorb the losses and legal fees and late fees and everything, there's really not much for an investor to worry about.
And
Okay.
two last
Yeah.
things, sorry. That, I mean, I think it goes back to, we don't allow for second liens. So when everything is in a first lien position, we are the only the holders on that note. And then secondly, and Josh makes fun of me because I'm kind of our resident nerd at Trius Lending Partners. I geek out on this stuff. I love it. But there's a lot of really interesting research that, the economy can be doing one thing. So we could be going into an economic recession, but there are actually really, what's weird is there's actually a reverse, is often that the housing market tends to do better even during some of those periods, which might incidentally
Yep.
not make immediate sense. But that also kind of, the housing market can remain really strong while other things are happening around it. It is steady, it is consistent, and when we have really, really strong underwriting, it puts us in a fantastic position, even though there might be some other external factors which might be unsettling. They're going to affect things like the stock market, but we're going to be pretty steady. Sorry. So
Yep.
that was.
Yep. No, great stuff. Okay, let's keep moving along. We have a lot of great questions. Under
Yeah.
Trius Fund 1, what are the kinds of assets that you finance and provide funds for? Are there specific types of assets that you do or do not prefer to fund on based on nature, commercial, manufactured, storage, industrial, et cetera, multifamily? Let me answer that question, and Jessica will jump in as well. First thing I will say is we don't do office. Okay, so we stay away from office. That is something we have not touched, will not touch. Too risky in the current marketplace, crazy days right now, so we don't do anything like that. Our loan amounts also range from 100,000 to 1.5 million, something we didn't mention on there, which is really important. We don't do like a $10 million building or a huge multifamily tower. We do a lot of single family, a lot of scattered site, small retail, small strip center, 800,000, a million, million and a half, that kind of thing. So much more manageable. Having said that, anything that's non-owner occupied will do, other than office. Okay. We'll do an office condo, but not an office building or office tower. So we've done strip center, retail, manufacturing, industrial, storage, traditional sort of commercial in that sense. We have done mixed use, bar or restaurant below, living above. So we've done those kinds of things. And then anything that someone would live in, rent, Airbnb, summer rental Airbnb, short-term Airbnb, long-term rentals at the beach, long-term rentals in the city, long-term rentals in the suburbs, et cetera. So that's the answer to that one. Can you describe what your underwriting guidelines look like while selecting opportunities as well as borrowers to fund? I'll give a quick jump on that one, and Jess will jump in, and then Jess, you'll handle the next few ones here. So the underwriting process, I'll be very quick on how we do it because I used to do an hour presentation just on our underwriting process during COVID. We did a lot of presentations, a lot of webinars. We look at the borrower pretty deeply. There's two aspects to it, the borrower and the property. The borrower is, can they afford to make the payments that they're going to have when they get into our mortgage? How's their credit history? Don't care about the score, but do they pay their bills on time as a general rule? Skin in the game. Do they put money in the game? Do they bring equity? We always require down payment and closing costs to the table. So we require the borrower to put money, tens of thousands of dollars on average. I would say it's probably $45,000 to $50,000 they bring to have skin in the game. So they have a vested interest in the success of this property and project. And do they have that money to do that? Can they pay their bills? Do they pay their bills on time overall? And do they have experience or not? It's okay to not have experience, but it's something we look at. That's the borrower approval process. And we look at that by credit check, background check. We will have an issue with criminal issues or fraud or anything like that. Tax returns, income, pay stubs, 1099s, financial statements, assets, retirement accounts, et cetera. So we look at all of that from A to Z. With regards to the property, then the borrower's approved, then we have to approve the property. The property approval process is a very deep dive online in our office, and then a personal inspection as well of the properties. So we're looking at all of the factors involved. We want to touch it, feel it, see what this property looks like. How's the basement? How's the inside? How's the outside? How's the neighborhood? How's the backyard? How's the street look, et cetera? So we're looking at all of that and taking that all into account based on comparable sales and based on the ARV we expect, the after repair value. What do we think this is going to be worth? What does the client think it's going to be worth? Does that make sense? How much of a rehab do they need based on our experience? Are they putting too much into the rehab, too little in the rehab? What quality level of the rehab are they going to do as well? So that's really important for them for us to look at. Those two factors all look good. We close pretty quickly with our borrowers. I hope that answered your question. If it doesn't, please let me know and type in again here. Okay, Jess, this one's for you. Blah, blah, blah. I joined you ahead of the call. Are the note is right? Yep.
They're performing. Yeah.
So the question is, are the notes performing or non-performing notes?
Yep. They are performing.
So all of our notes are performing notes. We don't sell non-performing notes. Just for those who may not be clear on that, non-performing notes are notes that are sort of have late, are in default. People are looking for deals or discounts on that. We don't deal with that. We have people who are on time, current. Our average credit score is like a 710, I would say right now. Our average borrower usually makes six figures. So we have good borrowers we deal with. We want to work with good borrowers, good properties who make payments. And those are the notes we're working with, performing notes only. Credit history and financial situation. We talked briefly on that. Jess, go. Yeah.
Yeah. Well, I was a borrower, so I get excited about
exactly
this. I mean,
yes.
Yeah.
Yep.
So,
perfect.
So first of all, we're talking about a lot about like the investment side of things, but from a borrower standpoint, doing this, it is a business. It is a job, and they need to have a performing note as much as we need them from an investment standpoint to have a performing note. So what does their credit history and financial situation look like? Well, first of all, as we mentioned earlier, about 45% of them are repeat borrowers, and they aren't just doing the job, they're doing the job really, really well. So in short, it looks good. They're experienced, and I would say pretty much almost all of our borrowers have another W-2 income. So for example, it's easy, so I apologize. I'm using myself kind of as anecdotal, but as my husband and I were growing our own rental portfolio, he was active duty service in the Air Force. and I worked for Department of Air Force as a contracting officer. That is a borrower profile. We had outstanding credit. So, and that kind of generates a lot of questions. Well, why are they borrowing money? Well, it's a business, right? And well, we had two really good paying jobs, again, anecdotally. Obviously, to do what we wanted to do to the scale and scope we wanted to do, we needed private lending. And that is what Trius had to offer. So right off the bat, the situation with about 45% of our borrowers is we know them incredibly well. They're very strong financially. They have W-2 incomes and they're experienced, and then you do have folks, I mean, everybody starts from somewhere. And so that's where we really are looking, as Josh said, at the deal as a whole. So perhaps we have a less experienced borrower. They have a strong credit score, but this might be their first deal. And we're also kind of reviewing where their quotes came from, their general contractors, and other aspects of it. Josh did mention that we will take some lower credit scores. And I also kind of want to address that a little bit because your credit score is a function of a number of factors. And an eight, well, we do have borrowers. I saw one today that has an 819 credit score. If you are an active real estate investor, or we have a lot of small business owners, we have a lot of folks that run their own general contracting, or they're somehow in the construction trade. Honestly, sometimes their credit scores can be in the mid sixes and they're still an absolutely fantastic borrower, but they've got a lot of credit pulls. They have activity, they're refinancing houses out. And so we are looking at the big picture. And as the investor relations manager, I always present that to the investor. Hey, here's some of the detailed specifics, but this is what it really looks like. And you kind of have to contextualize the meaning within those specifics. So I hope that I got excited. I hope that answered.
No, great stuff. Quick question is the a minimum amount to invest in the fund or the note?
100,000 for the fund. Uh, the note, we try to stay at 100,000. I have worked with folks with the goal to getting them to 100,000 over time. So sometimes, we can take a little bit less and go from there. That is on the direct note.
Yep. Quick question on the legal and foreclosure process. So I won't get too deep into this, Regina, but the legal and foreclosure process, we do track in the different areas in which we operate, and we handle all of that. Whether you're a note investor or a fund investor, you won't see it, feel it, hurt it, or have anything really to do with it. I had someone the other day, I said, hey, that property that you're a note investor in, we're taking it back. We're going after the person. We think we're going to take it back as a deed in lieu of foreclosure instead of going through the full foreclosure process. But that person will get all of their interest, all of their principal, and won't feel the impact of it. And they won't be charged any fees, any costs, or any expenses for that. We absorb all of that. If you're in the fund, you don't feel anything. The benefit of the fund is you get the same amount payment every month, no ifs, ands, or buts. With a note, you get it while that note is active. So when that note pays off, Jessica's going to call you up and say, hey, I got good news and I got bad news. The good news is you're getting your money back. The bad news is we got to put it back to work. Let's get going. I guess that's good news again. So it just has to repeat. So there's a little bit of work, a little bit of communication for that. When you're in the fund, it just goes on for as long as you want it to go on. And that retention rate with us is like 99.9%. Next question. What is the condition of the underlying properties? Jess, you want to talk a little bit about that as someone who has borrowed from us before?
It depends. I mean, the short answer is it absolutely depends. So, we're underwriting properties that just merely need what I would consider kind of like, lipstick. We're going to make them pretty. You're going to change out some countertops, maybe even, do some cabinets, but we're not looking at anything underlying fundamental, structural, anything like that. And then there's properties where, I mean, I just was looking at a house today. They're adding 2,000 square feet. They had to pull permits, plumbing, electrical, structural. And we're also checking that. Like we want to see their permits. And so absolutely the condition of the underlying property can absolutely depend. And of course the loan is commensurate to that. And really what we're concerned about is making sure we understand what the after repair value is and that informs how we fund that particular note and loan. But we have folks do a lot of pretty in-depth work.
Yeah, and the reality is a full gut is actually a lot of times better than sort of the
Yeah.
modified sort of visual stuff. It just you know what you're getting into. Let's talk retirement accounts. Do we accept SEPs? Is question number one. And on the same things, we do a lot of self-directed IRAs, by the way. What are the tax implications for moving money from a 401k to a self-directed IRA?
You can do one move a year, 401k to self-directed IRA, so one every 12 months. And it is like for like. So in that one, you do not have a tax implication for that one.
Right, right. Do we do SEPs? I don't know. Have we done a SEP
No,
before?
we
I
don't.
don't know that we've done. I don't even know if it's eligible, to be honest. I would probably say we would look at that. I just don't know, to be completely
Yeah,
honest, on a SEP.
yeah.
Um, from a Schwab funded IRA, we're not essentially approved through Schwab. So you would have to be with one of the self-directed IRA companies. We partner with a few of them ourselves. There are a number of other great self-directed IRA companies around the country. You'd have to move from your Schwab IRA to a self-directed IRA. The big guys don't like self-directed IRAs for a whole host of reasons, mostly federal regulatory scrutiny. So they don't really deal with it. I know we've had, Jessica, correct me if I'm wrong, we've had some people come from some of the bigger IRAs and move it over to self-directed IRAs to make it work.
Correct. When we start
So,
looking at that, I really I would just take it offline, reach out to
yeah,
me, and
yep,
then I can also kind of help. And we work with a couple companies in particular we recommend. And to Josh's point, we've seen people roll over, but it does
yep,
become nuanced and individual for sure.
yep.
Yeah.
Next question. So are you stating that it's guaranteed? I don't use the word guarantee. It's a dangerous word to use when it comes to any money on the borrower side of real estate investing and on the investor side. So I cannot say guaranteed. I will not say guaranteed. What I will say is for 21 years since the day we started accepting outside investor money, no investor has ever not received all of their principal back and all of their interest. Period. End of story. So I think the track record speaks for itself. I cannot make any promises or guarantees. Life is just not possible that way. I think our track record indicates a very, very, very high likelihood of that continuing on as we continue our growth process to be very careful, very diligent, and very, very personal with regards to the money. One of the things Steve taught me when I first started on, we've passed this along to all of our employees. Would you put your own money in? Steve asked me that question. Would you put your own money in this? And I do have my own money in this. And Steve has his own money in this. And a lot of us have our own money in this. Um, and that's a big question, and it impacts how we make all of our decisions. We will not do properties that are junky. We will not do properties we wouldn't feel comfortable taking back ourselves. We want to make sure the borrower makes sense. We want to make sure there's a good risk tolerance, that we're not taking on stupid risks just to make money. We're not in it just for the almighty buck. We're in it for the long term. And that's really important for us to stay in this for the long term. We have to do good, safe, quality loans. Okay. Jessica, do we have an
Okay.
option to diversify the funds offered to Trius? Are we able to choose from the loans? And we talked about, is there a minimum? So we're able to choose from loans. How does that work?
Yes. Short answer, yes. I mean, longer answer, a lot of them are already spoken for, right? So, and obviously I'm putting people on newer ones that have closed, and so there's limitations of what is already funded. But that's like where I really get the opportunity to work with you directly and we have the conversation. This is what I'm looking for. If kind of more specifically, if your question was, hey, I have $200,000 to invest, but I'd like to put 100K on one and 100K on another, just to kind of even further diversify that. Again, short answer is yes. I love my job. I love getting to work with investors and I love making it happen. So that's not a problem.
And and so what's happening with Jessica, and she's phenomenal at this, is she'll be on the phone with you. Noel will say she'll be on the phone with you, being like, "All right, I got a place in Baltimore City on the, in the Roland Park area. I got another one in the Canton area, and I got another one in Baltimore County, and this one's 200,000. This one's 500,000. This one's 120,000." And that's what Jessica does all day long, quite frankly. And it's interesting. So you do have an ability to participate and be involved and know what you're getting into. No doubt about
It,
it.
yeah, it's like puzzle pieces. I have investors that only they want to be the only person on a note.
Yeah.
Is
Right.
what they prefer.
Right.
I have investors that will not be the only person on a note. They want to split it at a minimum 50-50 with others. So it's just truly like that conversation. Yeah.
Next question I love, and I will take this. In addition to the first lien position on the asset being funded, do you require the borrower to also provide a personal guarantee on the amount borrowed? Do the borrowers make monthly interest payments or escrow any interest payments up front? Love this. It's all yes, yes, and yes. We always require a personal guarantee from everyone in the LLC on every single loan we do, period, end of story. So we are in first lien position with a personal guarantee of everyone. That is the way to play this game. That is the safest and most conservative way, which we are conservative safe, conservative safe. That's what we do. That's who we are. So yes, on everyone. In addition, another aspect of being safe is that skin in the game, holding that borrower accountable is monthly payments. We require monthly payments. We don't hunt them down the road. There are people out there that say, well, just pay me on the back end. No. If you're paying on the back end, what do you care to make any payments? What do you care about this property? There's no money in it. We make borrowers make payments every single month on the first of the month, just like your normal mortgage payment or car payment or credit card payment. If the borrower either doesn't show enough consistent cash flow, great example. We've done some business with barbers, laundromat people, cash businesses, great businesses. Some of them doing extremely well and great credit, et cetera. But they can't show me a consistent income. Okay. And they don't report much, which is fine too. I'm not the IRS. Okay. I say to them, look, I love you, love your property, love everything we're doing. You're gonna have to pay me in advance. Okay. So we'll take 6 months of payments in advance, 9 months of payments in advance. They'll pay those at the table. If the loan pays off prior to the time they put aside with us, we'll give them that money back. We're not keeping money that wasn't earned by us. But at the same time, we need to be safe. We need to know we're going to have that money in our escrow account, in our side account, ready for making those payments on a monthly basis. So someone will pay 6 months, we'll sweep the payment out every month. When they get to the end of the 6 months, the loan is due and they don't have any more payments due at that point. So we're very safe on that and very conservative with that. And that's been a great, great additional reason for our successes. Would you accept in an LLC, S Corp, C Corp, which is a group to invest, or do they have to be individuals? Yes.
Yes. Yes. So, yeah, yes, we
Right.
need the
Easy
tax.
yes, right?
Yeah. So done. No, well, a little real quickly, obviously we'll need the tax EIN and to do all those things correctly for end of year documents. And of course, anybody listening in, if you personally have an LLC, don't forget that the new, law enacted this year with the financial disclosure requirements with the IRS. If you don't know what I'm talking about, you have an LLC. Even if you're not interested in investing with us, reach out to me. We try to look after our investors across the board. I am the resident geek, so I'm always paying attention to that stuff. But yes, back to the short answer.
Yep.
Absolutely.
Yep. No problem at all. Pradeep, do investors have access and visibility into what investments have been made through the fund and how they're performing at any point of time? Dashboard or something similar to monitor and track performance? Yes and no. So the first answer is we do an annual audit that the third-party independent accounting firm that we spend an enormous amount of money with, because that's the way the system works, and they do an audit. And that audit is a full financial audit of our books, records, verifying assets, verifying loans, verifying liens, verifying properties, borrowers, the whole bit. They are digging around here for a long time. It's quite a process. It's not fun for us, but it's really important for us to be able to show our borrowers that we take this seriously and that we have been vetted by an independent third party. So that's the quickest, the easiest answer. Other than that, on a case-by-case basis, we have and do provide additional insight and oversight. We do want to be an open book. And so I've sat with people in our office here, would welcome anyone on this Zoom to whoever wanted to come in, sit with us, meet with us. I'll turn my screen around. We'll look at properties. We'll look at notes. We'll look at recorded notes. I'll show you underwritten loans. I'll show you credit reports, whatever. There's obviously certain privacy disclosures as well, but within those, the realm of what we're allowed to show, we're an open book to let you see where your money's going. We don't want to hide anything. We're not trying to hide anything or keep anything away. We want to be the exact opposite, making sure every question's been answered, every concern's been addressed, and you're able to see and feel comfortable with that. I have a few very large investors. We'll sit down on a pretty regular basis, and large can be defined by anything. So I don't want to say you have to be a large investor, but we sit down on a regular basis and we go through everything. He sort of interviews me a little bit and sort of re-interviews me on a regular basis. What are you doing with this? He wants to make sure I'm answering the questions the same way, right? What about this loan? Have you had any issues? Where are your foreclosures? What are your problems? What are your issues? How many people do you have working for you? Comes to the office, wants to see what's going on. Love it. No problem with it. Like I said, we have nothing to hide. And we love someone having that close relationship and knowing that whenever he leaves here, I know he's going home and sleeping like a baby because he feels very comfortable with everything we do. We've answered everything properly and spent a lot of time making him comfortable with everything. That's really important for us. Regina, I had a client invest 500,000 and now I wish I would have had this information. Well, we hope so too. Now, a lot of tax clients are seeking to invest in the fourth quarter and avoid tax hikes. We are here. We are always taking new investors. Part of our job, my job, Jessica's job, and the rest of the team's job is to load balance the money in the loans. We continue to grow on the loan side and bring in more loans, and we're constantly needing more funds to fund that. So we're happy to talk to anyone and put money to work essentially immediately. So that's really important as well. Okay. Nawal, thanks for the information. I've been been on the borrowing end. I've dealt with Steve and David Bond, and it's been great. Thank you, Nawal, for that. Again, that's a great way. We've had people, sort of cross with both, and Jessica obviously crossed over, and now became a key employee as part of the team. So that's just how we conduct things. That's just who we are and how we work. We're not some corporate big office tower on Wall Street. We want to do right by our borrowers, do right by our investors, do right with our employees, and hopefully have a really good time doing it and taking care. And the fiduciary responsibility of taking care of people's money is really serious with us. We have family involved, friends involved, all people we know. I would say 90+% of our investors have a relationship with us, or we formed one, right? One was a breakfast Steve Bond, our founding partner, myself went to and spent many hours with a new investor, getting to know them. That's how we want to be. That's who we are. That's how we conduct ourselves. It's not a cold paper or email relationship. We want it to be more than that, so that people feel comfortable knowing that their funds are safe with us and that we're doing good quality work. And then, like I said, and I'll end with this, if there's no more questions, I think we've addressed them all, is when you invest with a stock, you're just one of a gazillion people putting money in a company you hope is going to do things right. Now, you hope things are going to do things right with us as well, but you're in a loan secured by a first lien mortgage on real property. There is a hard asset attached to that. That is an extremely safe investment. And that's one of the big differences to keep in mind. It's a great way to end our presentation tonight. This is not just putting money into a company and saying, gosh, I hope these guys do well. I hope they know what they're doing. I hope Jessica knows how to send out invoices and collect money on a monthly basis. No, this is a property attached to everything with a low loan to value, so that things are safe and there's good equity position if we have to take the property back or sell it or foreclose on it or what have you. And that's the safest type of investment when it's secured by something that is a hard physical asset. That makes a difference. So when you're with Jessica and you're looking at 123 Main Street and saying, I'm willing to fund that for $100,000, you can, if you wish, and some of our investors do, drive by 123 Main Street and be like, okay, I know I'm in this. This place is definitely worth more than the 100,000 I put in. I feel great about this. No matter what happens, I am safe. My name or my LLC's name or what have you is on that, and I hold that as collateral against my investment. That's really valuable and really powerful. I will end on that. Our contact information is up there. Invest at triuslending.com. Our website, of course, triuslending.com. I think that's probably Jessica's number. Is that you, Jess? Yeah.
That's my personal cell.
So Jessica works 23 and a half hours a day. So you can call her anytime, day or night, except when she's running 100-mile runs, which is another webinar for another time. But if you do talk to her, ask her about that. In all seriousness, we are here for questions. We are here to address. No pressure at all, period. Yeah. You can spend 3 hours on the phone with Jessica and 3 hours on the phone with me and do 2 meetings and 3 Zooms, and we're never going to say, what are you going to do? Not who we are. Once you feel comfortable, if you don't invest with us, no problem at all. If we can be a resource, if we can be helpful, if we can be a knowledgeable source for you to learn more about real estate, understand more about how things work and how this process and industry works, that's what we're here for. Love to make a relationship, and you never know what happens down the road. But at the end of the day, only do what you want to do and you're comfortable with it, with every single question answered. And as I said before, making sure you are 100% comfortable. 100% comfortable with where you're putting your money, whether it's 5,000, 10,000, 100,000, or $1 million. You have to be very comfortable with that. Oh, we got one last question. Is mortgage protection insurance allowed on the property in the case of loss of life by the borrower? I don't see why not. I've never had anyone do that before, but I don't see why not would be the short answer, Regina. We'd probably have to take that offline and look into it, but it's an interesting strategy. So yeah. Not bad. Reach out to us, call, text, email. We'll follow up with emails to each of you individually. Any questions, big, small, or medium, call, text, or email. Happy to address and happy to do a deeper dive on a one-off basis to go as deeply as you want into the opportunities and understand things even better and look at some potential deals to invest in. Thank you all. Have a wonderful evening. Thanks for the time. Take care. Good night.
Thank you.